Hi guys, today we are going to do the fourth part. We are learning this admission of a partner in parts. I'm covering all the concepts. So first video, if you have seen, I have given 5 parts in all, which we are going to learn one by one. Out of those 5 parts, first part was calculation of profit sharing ratio, which you have already seen. Then the second part was about treatment of goodwill. Whenever partner is admitted, how to record in the books of account, that we have seen. Then the third part you have seen, re-evaluation of asset and reassessment of liability. Today this is the fourth part I am covering, that is accumulated profits and losses. So this is a fourth part you are going to learn. Now in this accumulated profits and losses, what do you mean by, students, this accumulated profit? It is nothing but past year's profit which we have kept in the business. We have not withdrawn it. There are many reasons why we are keeping our past profits in the business, just to meet our unforeseen events. It may be like sometimes happen, theft may take place in our office or at factory place, and we need to adjust that loss by using this accumulated profits. And there may be a natural calamities like flood, earthquakes. It can be any reason. So where we can use this accumulated profit under such unusual circumstances. So that is the reason. Now where we record this, like when you see the question, where you will find this accumulated profit given to you. So in question of this topic, they gives you balance sheet, and balance sheet, as you know, you have liability side and asset side. On the liability side you will find accumulated profits given to you, and on the asset side you will find accumulated losses. So very first thing that you should be clear of is that on the liability side you will find profits, and on the asset side you will see the losses. Now I'm just writing few examples of profits which you will be given in the exam. General reserves, profit and loss account, then workmen, compensation reserves, then investment, fluctuation reserves. So these are few examples which I have listed down to give you an idea that these are your accumulated profits. General reserve is also called reserve fund. P&L account, workmen, compensation reserve. This is workmen compensation reserve, and investment fluctuation reserve. So all these reserves are your basically a profit which will be given on the liability side. Let's see the example of losses. There are very few. One is advertisement expenditure, or they may give you deferred revenue expenditure, or they may give you profit and loss account. So be careful with this profit and loss account, because if it is on the asset side it is loss, and if it is on the liability side it is a profit. So P&L account might be on any of the side. So hope you understood with the examples of losses and profits. So any sum, if you see these profits, if you see these losses in the question, in the balance sheet, you need to understand how to record this. Now let's understand how to record this profit first. So I am giving you entry to record accumulated profits. This I am explaining you with reference to admission of a partner. So whenever new partner is admitted, what you are going to do with this accumulated profit? This is past year ka profit, and it belongs to whom, students? Yes, you all are correct. This is past year's ka profit, old profit. It belongs to old partners. So definitely it has to be given to the old partners. So you can remember this way, that accumulated profits are basically old profit, and it should be given to old partners, and it will be given in the old PSR. So this is how you will remember. This is an easy way to remember. Old profit, old partner, old PSR. Now how to record it? What is the accounting entry for this? It's again very simple. Liability always have which balance, students? You have to remember this always, that liability always have credit balance. Now if we are giving out this profits, we don't this account will get closed. So if you are giving out accumulated profit to the old partners, what we are doing, we are giving out this profit to old partners. If you are giving out, will there be any profit left in the balance sheet? No. So I want to basically close this account. So if I want to close this, I have to give opposite effect. So what effect you will be giving? You have to give debit effect. What balances do they have? They have credit balances. If I am giving out to the old partners, what effect to give? Yes, you will give opposite effect. So this accumulated profits will get debited. Accumulated profits debit. When you debit accumulated profits, what is happening, students? Your accumulated profits account is getting closed when you give debit effect, and you will give it to the old partners capital account. You have to distribute this profit among the old partners in old PSR. I hope you have understood this, and how to remember the effects also you might have understood. So I am repeating, liability always have credit balance. So these accounts are profit accounts. They have credit balances. If I am giving out to old partners, we are actually closing it down by distributing it to the old partners. So to close down, you give opposite effect. So you are debiting profit to old partners capital account. Hope you have understood the effects. Now, how to record accumulated losses. So again the same funda, old losses goes to old partners in old PSR. So this is how you will remember. It's very easy. Now, sorry, again, where losses will be given? Losses will be given on the asset side. Asset always have debit balance. So if I want to close this losses, I want to close this losses account and I want to distribute it among the old partners. So if I want to close these accounts are having debit balance. I want to close this. So what effect to give? Yes, students, you understood the technique. You give opposite effect. So losses accounts will be credited to close it. Then what to debit? We are giving it to old partner. So your entry is old partners capital account debit to accumulated losses account. When you credit losses account, your losses account gets closed. I hope you have understood the master entries. Now these are master entries. You don't write, whenever you solve the sum, you don't write accumulated losses. While solving a sum, write down the name of accumulated losses given in the sum. Write down the name of accumulated profit given in the sum. This is a master entry. For this master entry, you have to write down the names of losses and profit given in the sum. This is just for your understanding that always your entry for accumulated profit will be this. Accumulated profit is always debited to old partners capital account, and for record accumulated losses, this will be your entry, old partners capital account debit to accumulated losses account. I hope you have also understood the reason why we are debiting accumulated profit and why we are crediting accumulated losses. I am explaining this important point again. Pay attention. Accumulated profit is on the liability side, and the liability always have credit balance. To distribute it to the old partner, you give opposite effect. That's the reason we are debiting here in entry while giving it to the old partners. Accumulated losses are always on the asset side having debit balance. When you give out to the old partners, give opposite effect. That's the reason we are crediting it. I hope you are clear with the concept. Thank you, students.